We expect Bitcoin to appreciate about 30% a year for the next 20 years. We expect to pay about 10% dividend yield on the preferreds. 2/3 of the benefit go to the common equity shareholders, and most of the volatility is stomached by the common equity shareholders and the corporation. I do. I think we're in a Bitcoin. We're in the digital gold rush, and 2035 is the .99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. Yeah, there's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035.
As Bitcoin shifts from speculative hype to a core corporate treasury asset, Michael Saylor lays out why digital capital is rewriting the rules of modern finance. Michael Saylor's recent comments on digital capital and Bitcoin offer a lens into how corporate treasuries are beginning to rethink value in the digital age. From your perspective, his argument is clear. Bitcoin is not just a speculative asset, it's a strategic tool for preserving and growing corporate wealth. Saylor points out that digital capital has surged from nothing to $2.5 trillion over the past 15 years, and MicroStrategy's $8 billion issuance of instruments like STRC illustrates how Bitcoin's volatility can be transformed into structured, tax-advantaged returns. You notice that while a traditional bank account might yield 4% and be fully taxable, Saylor's approach delivers a stable 10% return, effectively reducing risk while preserving upside exposure. He stresses that Bitcoin, free from tariffs, employees, or physical headquarters, functions as a decentralized index of the global digital economy. From your view, this positions it as a hedge against local currency depreciation, government instability, or corporate mismanagement. His framing of a digital gold rush signals urgency, noting that 99% of Bitcoin will be mined by 2035. Analytically, Saylor's strategy blends risk management with aggressive growth, giving equity holders most of Bitcoin's upside while providing credit investors reliable returns, a sophisticated approach that underscores the maturation of digital asset investment strategies. Stay ahead in the digital gold rush. Like, share, and subscribe for more in-depth crypto and Bitcoin insights.
At the end of the day, the big dynamic in the industry is digital capital has gone from nothing to $2.5 trillion over 15 years. Digital credit didn't exist 12 months ago. We've issued nearly $8 billion of digital credit. Digital credit has got a tax equivalent yield of 4 times higher than bank credit. You know, you can have a bank account, in New York City that pays you 4% and it's taxable, or you could buy something like STRC that pays you 10.5% that's tax deferred. So the market's evolving, and the short sellers aren't really interested in the impact of AI or the impact on digital assets to change the way the world works. They're just interested in being skeptical as a business. I don't really focus on them. Nothing great has ever been created by a short seller. I think the money market industry is massive. There's $30 trillion worth of assets invested in treasury type instruments in the United States. Stretches about 1% of 1% of that industry. It's about a $3 billion issuance. And the big idea here is you take an asset appreciating 50% a year with a volatility in the mid-40s, and you strip the volatility from 45 down to below 5, maybe to 2, 3, or 4, or even 1, and then you extract about 10% dividend yield. And if you do that, you end up with something which is yielding 6% more than the risk-free rate. And when the vol gets to 1, you've got a Sharpe ratio of 6. So we're really engaging in financial engineering to distill pure currency yield above the risk-free rate. And of course, the common stock shareholders in MSTR get the difference between the 10% that we pay and the 50% that Bitcoin's been performing. Long term, the math is pretty simple. We expect Bitcoin to appreciate about 30% a year for the next 20 years. We expect to pay about 10% dividend yield on the preferreds. 2/3 of the benefit go to the common equity shareholders, and most of the volatility is stomached by the common equity shareholders and the corporation. And the credit investors get this pure 10% return of capital dividend. That means it's tax deferred. They don't have to pay tax on it until they sell the underlying instrument. And that means that they're able to invest in a credit instrument that pays them a 10% dividend instead of holding a money market that pays them 4% in a taxable coupon. You know, we joke there's no tariffs on Bitcoin. Bitcoin has no employees. It's got no corporate headquarters. It is an index reflecting the digital economy or the global digital economy. So if you just like to buy 1/21 millionth of the global free market, then you buy one Bitcoin. As people lose confidence in a currency in Africa or South America or Asia, as they lose confidence in a government, if they think that their favorite company might make a mistake, war, famine, pestilence, fire, flood, uncertainty, acts of God, all of these things are risk factors, and they're all risk factors that Bitcoin doesn't undergo and doesn't experience. So as people get educated, I think they can see the appeal of buying digital capital instead of investing their money in equity capital or real estate capital or fiat capital or corporate credit capital instruments. And so this is all a teaching moment, but I think that every single month that goes by, more and more people start to appreciate the benefit of owning 1/21 millionth of all the money in the world forever.
As Bitcoin evolves from a speculative asset to a cornerstone of corporate strategy, Michael Saylor lays out how technology, digital capital, and AI are reshaping the future of finance. Michael Saylor reveals that as technology evolves, the hardware and software supporting Bitcoin must also be upgraded, similar to the regular updates consumers see with Apple, Google, and Microsoft products. From your perspective, this highlights Bitcoin's resilience. The protocol is continuously refined through a global network of nodes, with hardware updated every few months and software annually, ensuring it remains adaptive and secure. You can see that Saylor views digital intelligence, digital assets, and digital capital as transformative tools for corporations. MicroStrategy's use of AI to design $8 billion in digital credit instruments, including the STRC issuance, exemplifies this. From an analytical standpoint, these instruments manage Bitcoin's volatility while delivering high-yield, tax-deferred returns, allowing equity holders to benefit from Bitcoin's upside while credit investors enjoy stability. Saylor frames Bitcoin as a digital gold rush, with 99% expected to be mined by 2035, signaling urgency for acquisition. He suggests low-volatility investors consider credit instruments like STRC, while long-term holders can take custody or use ETFs. From your analysis, Bitcoin emerges not just as a speculative asset but as a cornerstone of corporate strategy and digital capital. Strategy's Q3 2025 results, driven by Bitcoin appreciation and strategic deployment, reinforce the tangible impact of this approach on earnings and shareholder value. Let's get back to the interview.
I think that technology will improve and hardware will improve, and at some point, if the hardware gets more powerful, we'll have to upgrade the software that protects our system. So just like you can expect your bank to upgrade their software, and you can expect to upgrade your Apple software and your Google software and your Microsoft software, and you can expect to upgrade your hardware devices. I'm on the iPhone 17 Pro Max right now. You'll upgrade your computer. Bitcoin is a protocol, but it runs on hardware and software nodes all around the world. The hardware is being upgraded every few months. The software is being upgraded annually. And so the software and hardware that runs the Bitcoin protocol is going to get upgraded just like your Apple and Android and Microsoft software will get upgraded. I think that digital intelligence, digital assets, digital capital are creating the most compelling opportunities for corporations in the world today. I think the important thing is to use them the right way. For example, we used AI in order to design those 5 digital credit instruments. So people ask, how do you make $1 billion with AI? Well, we created $8 billion with AI just by designing new types of securities. Yesterday, STRC traded $175 million. It's the most successful preferred stock in the century, maybe ever in the history of the capital markets. It was designed completely with AI. It's 100 times better than a good preferred stock. I would encourage anybody with any corporation to think about how you turbocharge your company by using digital assets, digital currency, digital capital, or digital intelligence. There isn't a company that you can't improve using technology in the year 2025. I do. I think we're in a Bitcoin. We're in the digital gold rush, and 2035 is the 0.99 year. That means that 99% of all the Bitcoin will have been mined in the year 2035. If you want Bitcoin, you need to get it between now and then, because the last 1% of Bitcoin comes out over 100 years. Yeah, there's no doubt in my mind Bitcoin will be a larger asset class than gold by the year 2035. If you don't want to take any counterparty risk, and if you have a long time horizon, then you should probably buy the Bitcoin because you can take custody and take it anywhere in the world. If you simply want the asset, you want it in a brokerage account, you should buy the ETF like IBIT. It's going to take you 10 seconds to do that. It's easy to borrow against it. If you're a believer and you want amplified exposure to digital capital, and also if you believe in digital credit, like our mission at Strategy is we want to give 1 billion people a bank account that pays them 10% tax deferred. If you think that's a cool idea to give someone in Japan or Europe or Switzerland or New York City a bank account that pays them 10% with no volatility, and if you think that Bitcoin can power that, then you're buying our stock because we're a digital credit factory. And if you want to outperform Bitcoin and you're ready to get on the roller coaster, you should buy the equity. But if your time horizon is less than 4 years, if you need the money back in 4 weeks or 4 months, then you probably want something principal protected. You want low volatility. You should buy a credit instrument. Like STRC is literally designed to get the vol, down. Right now it's 7, whereas Bitcoin's vol is 45 and Strategy's vol is 65. And if you want something that's going to be extremely low vol, you should buy a credit instrument like a treasury credit product like STRC. You'll outperform your money market. You might very well do as good as the S&P index, but you'll be able to buy it and sell it and get your capital back, in a month, in a quarter, in a year, and you don't have to, worry about the roller coaster.
Bitcoin is increasingly proving its role as more than a speculative asset. It's becoming a strategic lever for corporate growth. From your perspective, integrating technological upgrades with AI-designed digital credit instruments allows companies to tame Bitcoin's volatility while still capturing outsized gains. The Q3 metrics make this clear. $3.9 billion in operating income, $2.8 billion net income, and $8.42 diluted EPS reflect the tangible financial impact of disciplined Bitcoin deployment. Holding 640,808 BTC at an average cost of $74,032 per coin, the company has achieved a 26% YTD yield and $12.9 billion in gains. Analytically, this demonstrates how Bitcoin can function as both a hedge against systemic risk and a powerful earnings driver. Thoughtful integration of digital assets is reshaping balance sheets, optimizing capital, and redefining corporate strategy in the era of digital finance. Do you think Bitcoin will become a standard component of corporate treasuries, or will it remain a high-risk speculative asset? Stay informed on the digital finance revolution. Like, share, and subscribe for more insights on Bitcoin and corporate strategy.